Let's give it a few seconds. If you can hear us okay, let us know. Coming through okay? You can hear me good, right, Andrew?
Yes, I can.
Okay, good. I hear you good. I see your sexy shirt you got on.
It's just us two in the stream today, then.
No, it'll take a couple seconds here. Should be good. YouTube says, receiving your content, starting stream. Stream health is excellent. So we should be live and recording here.
Are you live on?
Yep, I'm live on OBS.
Live
it's recording. Every stream I've done for the last couple of weeks has been flawless. Stream health is excellent. Still says offline. Boy, I'm going to stop the OBS and restart it here.
Okay.
All my connections are good. Everything looks good. So we should pop up in a few seconds. Hopefully it's not a recording. All right. I see us there, Andrew. And you have your pen in your left hand, so that means it's not a recording. I'll wave up here. That'll tell us that we're live.
Right. We're definitely live.
Yeah, that's good.
You're back. Yes, we are. Can you hear us okay?
Yeah, I think we should be okay. So let's take a look. Yeah, we're definitely we're on the roll here. If you can hear us, let us know. I think we're good. So just to give you a little 2-second cram session here, loud and clear. Good, good, good. So right before we got on this stream, every stream has worked great that we've done in the last couple of weeks, of course. Right before we were about to get on the stream, I had to do a Windows update on my computer, so I did it, of course. And then it rebooted, and I connected, and everything looked great on my end. Stream was healthy, everything was good. So anyway, okay, so this sounds like it's much better. So thanks for your patience here. I guess that's the beauty of being in a computer world. I consider myself pretty computer literate, but what are you going to do? I mean, you can only run what you can only run. So here we go. This will be recorded for you, and we didn't save any of the other ones, so you don't have to worry about that, and you can watch it later if you want. So Andrew and I are here. I'm going to talk with you a little bit about the power of psychology in trading, and you had a great example of in the pits you were talking about that and emotions and different things like that. We talked about your.
Well, that's what I was saying. I just, I'll reiterate what I was saying there, because I don't think people were able to hear it with the lag and so forth. But when I joined the screens in about 2004, and that was the biggest challenge that I had, because when we were on the trading floor, you had all your fellow traders around you, and you didn't have time to be feeling sorry for yourself or making rash decisions, because for one thing, everyone saw you doing it, so you wouldn't necessarily make silly mistakes in front of people because you're exposed to people. But when you're sitting here in front of your screens on your own, and all you have is a mouse button to buy and enter the trades, it's very easy to get very emotional in your own little world. So I think that was the biggest challenge for me, moving from the floor to the screens, was the emotional side of things. And I put down in our pre-premium launch presentations that psychology really is the most important aspect of this whole business. I put it down at 60%, especially about right.
Yeah.
We spend a lot of time analyzing charts and looking for the perfect entry and the perfect exit. But really, at the end of the day, if you can't conquer the psychology side, you can't even say it. But if you can't conquer the psychology side of things, then you're basically doomed to fail. So it really is something that we should be homing in on the whole time with our trading, analyzing ourselves. And I think it really is such a key issue in this whole business.
That's right. That's right. I would agree too. And we're going to just hit, I think, on a few topics here. I know we had a little bit of a late start here with the video thing, but we're going to do some question and answer too. And what I think is really cool about doing the chat when we have more people in the room like this is just to be interactive. You know, if you have some thoughts or if you've had some issues with your own psychology and trading, share them with the group, because I think we're all in the same boat here, right? I mean, we all know Andrew trades his own money, I trade my own money, you trade your own money, so we're all in the same group here and the same boat. So if you're willing to, don't be afraid to share with the group, and maybe we can all learn from you know, your experience as well. So one of the things that I look in when I talk about psychology, and we're going to look at some charts maybe too at the end and talk about the markets a little bit. Somebody said, "Is that Jason on your shirt, Andrew?" That's funny. That's cute. Yeah. Oh,
nice eyes.
Yeah, that's nice. Googly eyes. I like it.
Yeah.
I like that. One of the things we talked about, and I think all the traders already know it, is the problem people have with over leverage, with revenge trading, with chasing losses, with thinking that they're going to make so much money because they, you know, if you're a new trader, most of the new traders, unless you have a friend or family member or a colleague that's into trading, most people who get into the Forex markets come in through the internet, right? That's how they learn about it. And what do you see when you go on the internet and look up Forex trading? You see all these ads. You see Lamborghinis and helicopters dropping people in, and you see these accounts, all these back-tested accounts where they take $1,000 and it's 3 million in 2 years, and that's how most people come into the Forex markets, right? It really is. I mean, you're exposed to that all the time. So what do you tell people about that? I mean, what's your take on that when they say, hey, you know, we're going to try to make 30% a month here for the next 3 years, or, you know?
Well, this is a true story. It's not, you know, just something I'm doing for the room. I actually did meet someone 2 weeks ago, and he was I said exactly so. He's a carpet fitter in here in London, okay. And he absolutely hates his job. Okay, he's got a good carpet fitter because he did one of my properties, and you know, he's a great carpet fitter, but he absolutely hates it. And when he found out what I did, he wants to get into it. He wants to pack up his carpet fitting job to get into this. And I had to be honest and frank with him about the expectations. He thought he could pack up, put £1,000 into an account, £1,000, that's about $1,200 US, into the trading account, and then he wouldn't have to do his carpet fitting anymore. So initially, I had to put him straight on that. It's a true story, and it happened within the last 2 weeks.
Wow.
You know, because you know, people come in with the wrong expectations. Now, when they come in with the wrong expectations, they're expecting too much. That's when the emotions kick in, because when it doesn't go the way they thought it was going to go, and they put basically their the whole future on the back of now I found Forex trading. That's basically where the psychology just goes out the window, because you come in with the wrong expectations. So that realistic expectations, I think, is key in here. And you know, you're not going to make those type of returns that you're going to that you hear about on the internet, because they're just not. It's just not there. That really doesn't affect the emotion of things. I think it's the over expectation or the false expectations. I agree. That's one of the things.
Yeah. I think you're right on that. You hit the nail right on the head. And I've had a couple close friends of mine that actually are in the same profession that I was in before trading that got involved with it, and they had the expectation level. I think they were pretty smart people, pretty well educated, smart people, common sense people. They weren't big gamblers, but they got caught up in the trap where they got lucky in the beginning. You know, they started out small and they had some really good winners, and then they made, $1,000 or $2,000 into $12,000 in a month. And once they got a taste of that, it was almost impossible to go back. You know what I mean? It's almost impossible, because you say, oh my gosh, this was so easy. And then you try to do it again and again and again and again, you lose. And you're going to get lucky eventually. If you have enough money and you have this big vat of cash, you can just keep dumping money in the Forex and hope to have those lucky trades, and they'll happen. But you can't really be happy about it, because you don't have any way to reproduce that. So
I think that's right. But the one emotion that I think everyone suffers from about is if you are, if you do everything right, you're going along well, but then you have this run of bad trades. And the bad trades, you then start believing that the broker is following you. Now, you might only be trading a $10,000 account, but you believe the broker is following you, because every time you get stopped out, the market, you pick the stop level in the market, that the whole world changes when it hits your stop. And it happens. And you then believe your brokers are trading against you. Okay, then you swap brokers. But the biggest thing, having seen, when you witness that, the most natural tendency is to go back in.
Right.
You mentioned it,
Right.
is the revenge trade. I see it time and time again.
Right.
Of people going back in with a revenge trade, and that basically, and sometimes it works, sometimes it, and if, as you mentioned, you get lucky for a few times, but
Right.
I guarantee you that type of trading will end up wiping you out. Going back with revenge, it will just wipe you out. I always say, I always say, if you get stopped out, leave that pair, leave it alone for an hour. Just go in, look for something else, look at some other charts that are not correlated, or go and walk the dog. Walk away from the screens, because the screens will be there tomorrow. You don't need to fight that last order, because it's not about that last order. So that is, I think, is the biggest thing.
That's true. And the other side of it, I think we talked about the similar thing last week or 2 weeks ago when we were chatting like this, is not only the revenge trade, but the people who have a really big winning trade and they want to go back for more right away. Trading is one of those things. It's so psychologically tough for a lot of reasons. And one is you can do the wrong thing and get rewarded. You can do the right thing by the book and listen to all the teachers and lose your shirt. It's when I was studying psychology back in college, we had the example of the Pavlov dog, right? The Pavlov dog. Remember, every time they'd ring a bell every time they fed the dog, and they'd ring a bell and they fed the dog. Then eventually they ring the bell and the dog's mouth would start watering even though there's no food, because you get trained for that. So with Forex, you can lose doing it right and you can win doing it wrong, and it makes you question everything. And you think, who is this Andrew and Jason guy? Every trade they pick, I lose. What's going on? These guys in the chat know nothing. And then you find some fly-by-night person who gets 3 right in a row, and you think they're the Holy Grail. So you got to really just be able to look at the long-term track record and the experience that people have when they come in the market, and try to take some little hints and tips from them. It's really tough, because when I was talking with my buddy from Colorado, like I said last week, we'd wear out the carpet pacing the house back and forth, talking on the phone about trades. And it's really sort of difficult, even for someone who thinks that they know the psychology of it, because you can think, I've been watching these charts all week. I've been reading the news. I've been talking with people. I've been being consistent. I've been following my track record. And if I just would have went and sat on a beach for a week, I'd have more money, because you have losing leads. So it's one of those things. The more time you put in, the worse you can do. So then what do? Do less time? Well, then you do less time, and then you might lose that. So it's really tough. You gotta be able to take all that stuff that you have, the win, the losers, and find that consistent sort of rumble in the middle where you can make these little bits of profits over and over again. It's tough, right? I mean, there might be one really good trade you have for the week, and you have 4 other losers, and you think, man, I could have just stayed in bed all these days and been better off.
Absolutely. I mean, the way I go about my trading these days is not to. I've trained my mind now not to focus on one trade, on the current. Focus in the moment. I don't focus on the one trade. I look at the bigger picture, and that's something that it took me a few years to think about, to get my head around. Certainly when I started on the screens back in 2004. The current trade is irrelevant as long as you've got your predetermined risk, and you're not going to deviate from your predetermined risk. It's in the market. The second you click the buy or sell order, assume that money's gone, and everything else is a bonus. If you can get your head around that thought process, then you're you're way on the way. So I don't look on one trade. I try not to look on one trade, I should say, because sometimes you do. And I had one this week, live in the premium room. I was stopped out to the pip, to the penny, and it went against me. So I think, I analysed it again with the room a couple of times. But the point is, you shouldn't really be focusing on that one trade. It should be the whole pool of trades that you should be looking at. And if you can get your head around that, then why should you be getting emotionally involved with that trade? And you have to accept also that the market is random. We use our charts to try and get an edge of where we think it's going to go. But at the end of the day, the next price movement in the Forex market is random. No one knows where it's going. And you have to accept that you sitting in not you personally, but sitting here on your laptops, what have you, all you're trying to do is get an edge out of the market. So don't take it personally when it doesn't work for you, because it's completely random. And if you were to get it right all the time, then chances are you wouldn't be sitting there in front of on a laptop doing it. You'd be doing it for the National Bank of Venezuela and getting their national debt. That's right.
That's right. I want to bring up the example that some of you might have seen, the Euro Aussie trade I posted yesterday in the live stream in the premium room. I was looking at what to do, buy or sell, and we had all the lines drawn on the chart. And as soon as the stream went down, I went in the chat and said, I'm selling at this exact price point. The thing went all the way down, hit the profit levels. It was just awesome. It was like 20 some pips in a few minutes. And then it went back up and I said, I'm going to try selling it again and get the same thing. And it went right back down. It took a little while, but it went right back down again. I'm thinking, this is great. But then at 2 a.m. London time or Italian time, there was a news out of Europe that says that the government's going to start supporting the weak Italian banks, and this all of a sudden brought some strength into the euro. The news wasn't listed. The news wasn't predicted. There was no news event time, and it happened when the markets over there were closed. I mean, 2 a.m. So I copied and pasted into my trade idea that this came out, and I said, hey, now remember, the whole London market, the whole U.S. market didn't see this little bit of news yet. So when the market opens, these people are going to see this and say, oh, that's good for the euro. And then you see this sort of trickle. And you might, have a better way to explain it. But if you're trading stocks in the U.S. stock market only, news comes out and you think it's priced in and the stuff whips around a little. But in Forex, it's really touchy because you can have a news event and a third or a half the world haven't even seen it yet because they're sleeping or it's dinner time. And then they come back around the next morning and now they see the news and then they trade on it. So these news events, you can see this impulse, this retracement, and then all of a sudden it starts to go again when the rest of the world gets that news. So the point is, like you said, it's all random. It's hard to predict. And you just want to take that little piece. I've sort of seen it like grains of sand in a sandcastle that you're building. It doesn't really matter if the Euro Aussie had 2 winners and then a loss. It doesn't really matter if your trade was taken up by 1 pip, like you did it, like you said in the premium room. That stuff over the course of weeks and months doesn't matter because you take that little edge, you take your risk management, you take all the stuff together, and you just continue to build. And you have good days, bad days, good days, bad days, and you just continue to build. Now, if you're going for months and months and you're consistently having the same problems, then you look in your trade journal and you try to figure out what happened. Maybe I shouldn't trade right before London opens. Maybe I shouldn't trade when I can't sleep and it's midnight and I've been up all night because I don't feel good or something. You see these patterns. So keeping track.
That's right. No one gets really excited when you've got to stop and it misses your stop by 1 pip.
Yeah, right.
And then turns back. No one thinks, oh, great, that's a great trade.
The sniper trade that you talked about. Yeah, the sniper stuff.
Well, I mean, but missing a stop, that's and keeps you in the trade. That's obviously you've been fortunate on that one. They just average over the course of the year. I mean, it's not about that one trade. Some trades you do get stopped out to the pip. Other trades you'll miss your stop by a pip, and it works out. But you don't get all jubilated. You have to put it into the context of the whole big picture.
That's right.
And these are just things that will help in the emotions. One of the things that I was talking about in the week, Jason, to one of the guys in the room was because I know my emotions. Now, we talk about my style of trading. My style of trading tends to be trend continuation. And that, I could be on a 1 hour, 4 hour daily chart for confirmation, or I can drill down to the lower time frames. But if I'm drilling down to the lower time frames, then I'm trading trend within a micro trend within a trend.
Right.
But that's generally my sort of style. But however, many people trade trading now, and are very, very successful at that. Picking tops, picking bottoms, buying at support, selling at resistance. And they're very successful, much more successful than I will ever be. But I know for me, it affects my emotions. That because I know myself. I try to avoid that. When I talk about them, I say this is this could be a counter trend setting up now for you guys at counter trend trading. I can see the value, I can see the entries,
right? But
I know that it affects my emotion,
right?
And I try to avoid things that I know I'm weak at, and that's what I'm weak at. Not picking them. I can pick a counter trend like anyone else. I can pick double tops, triple tops, areas of pivot points. We all see them. Areas of confluence, pin bars, and so forth at these levels, pin bars and inside bars and so forth. So I'm fully aware of them all, but I know when I start trading them, it affects my emotions. Yeah. So that's why I tend to not trade them so much.
That's a huge point. It's a huge point. Yeah. And I have Omega Man said, I want to hear how you guys quantify your edge. I think you basically told the summary. There's strategies out there for everybody. There's time frames, there's pairs for everybody. And some people just don't do well a certain way, not because it's a bad idea. It's because you can't handle it in your head. And that's what we're talking about, psychology. So Andrew, that you prefer trend continuation. That's where you have the most confidence. That's where you've seen the most, probably thousands of trades.
Yeah.
And if you're trying to trade, say, a divergence setup or a triple top or something, you can do it like anybody else, like you said, but it's not something that resonates with you. And that's what you guys have to all figure out.
I'll talk about it, Jason, and I'll also put, certainly in the new year where we're going to up all the, up the content. I'll be putting out trade ideas. A trade idea, I can put a counter trend trade idea and divergence trade idea. But that doesn't necessarily mean I'm going to take it myself in my main account. I might do it on my small FS account.
Right. But
my main business, which enables me to put the kids through school, I won't trade that because then I start getting emotional involved, and at the end of the day, one might work, one might not. But I don't feel confident in myself, in my own emotions to deal with it. I don't want to start deviating from what's worked for me over the years.
Right.
To quantify my edge, I take that back to basics. We've often heard that analogy of the tossing of a coin. Okay. So 50-50, random distribution of trades. My edge basically gives my edge. I look on a 50-50 split, but on the profits that I take will be bigger, not to a massive degree, but be bigger than my losses. The profits I take will be bigger than the losses that I take, and over the course of the big pool of trades, that's where my edge plays out. Not on the next 5 trades or 10 trades. Right. It's on the pool of trades over the course of the month. I review my accounts every month. Also every year, that's when I look at the P&L over the course of the year, and I see that my edge played out because I was taking bigger gains than I was on the losses, and that's how that works for me.
And that's a great.
And it also helps my emotions. It helps my emotions, Jason, because I don't get too sucked into to any one situation.
Yeah, that's a good thing. And if you're trading counter trend stuff, and you're trading with the let's say your risk to reward isn't 1-to-1. Let's say you have a strategy where you have a 100 pip stop, but only a 20 pip profit. Then you have to win way more than half the trades to make it work out. If you have a 4-to-1 reward to risk, a 400 pip profit, 100 pip stop, you can lose over half the trades and still make money. So it's really about trying to figure out your strategy and how you want to play into it. And over time, you take those little tiny bits, those 1%, 5% edges, whether it's a little bit more reward, whether it's more consistent strategy, and that's how you make your money in the Forex. It's not about calling some big winning trade on a Tuesday and then losing on a Thursday. If you have two trades and you win one, lose one, you're still going to come out ahead.
Absolutely.
That's just the way it is.
That's right. My edge is basically in my money management and not necessarily in my strategy. The strategy, I believe I have an edge. I believe that the trend is more likely to continue than to end, although the statistics will show you that markets are only generally trending 40% of the time. But of course, obviously, you drill down to different time frames and you can always find a trend within a trend. My money management is key to where it's the key to what I do.
I think that's a great one. And, we can research strategies like when I did my little talk on pattern trading, head and shoulders, triple tops, that type of thing. And you can say, the head and shoulders pattern has a certain percentage on the longer term time frame of being more successful than a flag pattern or a wedge pattern or something. You can analyze that stuff like a Gartley pattern or the video I'm working on now, Elliott Wave. Elliott Wave on the long term on this thing is more. But really what it comes down to is having a strategy. The strategies that most people use are good. Head and shoulders patterns, trend continuation, trying to find the right pullback of support or a fib level or some other price point, some psychological number, staying away from the big news events, not trying to gamble and risk it. But really what it comes down to is money management. And money management and psychology in the Forex marketing world are the two most boring things to talk about, right?
I think there's a study, I think it was IG or some one of the big brokers did a study recently, and or the last couple of years or so. And I think it showed something. I'm making these numbers up, so don't quote me on these. But it was something like 80% of retail forex traders actually get the market right. Get the direction of the market right when they enter that trade. They actually get it. But we all know the numbers about how many retail traders actually make it in life, make it in the market. So it's how you deal with it once you're in the position.
Right.
Is
Right.
the key to continued success.
That's a really cool.
Yeah,
That's a really cool statistic. I've not heard that one before, but I could absolutely see. I mean, most of the people in the chat room, they'll say, hey, the euro's going down over term. We're going to parity, or the Aussie dollar is going down, and you can be right, but you can still lose your shirt on it, right? So if you get the direction overall correct 70-80% of the time, but 90-some% of Forex traders lose money, where is the big gap? And it's money management and psychology, really. I mean, so I wouldn't spend all of your career trying to find the best holy grail strategy or the best indicator or any of that stuff.
That's the problem, because people do that. I tell you, that's another thing. You bring me on to another good point there, Jason. Sorry to interrupt.
Yeah, no, that's good.
Yeah, people are often in search of the next strategy. Okay, right. So they're in search. So they're trying something out, and it works for a while, and then it starts having its drawdown, like any strategy will. And they ditch that strategy, and then they move on to something else.
Right.
That doesn't work, so they ditch that one. Then they can find another one, and then all of a sudden, gosh, they found they found it. And this one was really, this is it now. They can give up that carbon fitting job, and they're going to start trading this strategy, and that works well. And they've had a really good month, up 10% in the month, and then that starts fading. So they ditch that one and go and buy another one. And that's basically the psychology of it. Now, if they're stuck at the same strategy that they threw out initially, just kept religiously doing it, chances are they would have had
that's right
a positive risk reward curve.
That's right. That's right.
As opposed to this, and a lot of emotion along the way.
Yeah. Yeah. I mean, the one-on-ones that you and I have done, and you've told me these same things. It's cool. I really like being able to talk to people from all over the world, right, and learn all these different culture thing, like Boxing Day. I don't even know what Boxing Day is. I mean, I've seen it on the calendar, I don't know what it is. It's just sort of cool. Or like when I had Thanksgiving here and we had everybody coming over, the turkey's in the oven, and I'm thinking, oh, nobody's gonna be in the market. Well, Thanksgiving's just really here in the States, and I think Canada has it on a different day. And it's really interesting. But what I've heard over and over, talking to people from Sweden, from Italy, talking to people in Australia, talking to a trader in India, is that you find something, and if I were just to talk to you, like looking right at my camera, talking to the people in the chat room, when you hear from hundreds of people over years, because I've been in the Forex and running websites, doing videos for almost a decade now total, online, trading over 10, but you just feel bad because the risk of success is so low, and here's the reason why. Let's say you join forexsignals.com and you come in here and you're new, right? Or you buy a $10,000 course, or you fly to London for some one-on-one intensive. Most people will either be lucky or unlucky with their trading right after that happens. Let's just say the first month. The first month after you take our advice, you could lose your shirt. The first month after you go to this big private fly-in training, you could make it all. You could buy this course and do really well for a month, and then you buy another one and do really bad. But what the truth of it is the market is just a random if you're going to be lucky or not. So you got to stick with one thing and stick with the strategy that works. The simplest things are the most powerful, I think. And if you can control the strategy and the money management, and don't judge based on the trades today or tomorrow, but judge over time, and don't change your mind unless you see a problem. It's hard to explain, but I'm trying to tell you that these people that I talk to, like you and me and the people in the chat room, most of the people who are losing money are doing the same exact same issue. It's the same problem over and over and over again. It's just a different package. They either say this broker's trying to hunt me down, or I can't get my withdrawal out because of this, or Andrew's trade didn't work, or Jason's worked, but then I got in late and now I'm stopped out, or, my course, the guy never shows a loser, so I feel like this is all a scam, or the forum said do this, so I stayed in longer because it's always the same. It's just like a fuzzy TV. You're just throwing darts at the board and hoping to get lucky, and you got to get something that you don't stray from.
Well, I say, follow me, Jason. You'll see lots of losing trades. That's no problem at all.
Me too.
I don't mind. I don't mind them. I don't get excited about them.
Right.
Jack Shib says, I think a good strategy tells you a system's preconditions for a valid setup, entry level, stop loss, profit targets, and how to manage the trade. Anything short of that might not be a good strategy. Yeah, that's right. Strategy. I mean, that's almost like a plan, a trade plan. But yes, I mean, that's strategy is not just entry and exit. It's also to do with your money management as well. So that makes total sense as well. And Omegan says, if you have a rule-based strategy and don't break the rules, you'll end up with discipline instead of jumping in the market on a whim. Yeah, I mean, what I've been saying to a few people, I'll share it with you guys now.
Mm-hmm.
Jason's heard this so many times, Jason, so just mute me if you want and go and listen to something else.
I think that what you're about to say is just the same. It's so important because it's so hard to do. But I want to hear, because I don't know. I haven't talked to you that much this week.
Okay, well, if there's 100 or so people in the room now, so I'm sorry to bore the people that have heard this before, but I will challenge anyone. And if you're trading over Christmas and you've got nothing else to do and you want to trade, do this over Christmas. It doesn't matter. This is not a profit and loss challenge, how much money you can make, but it's the challenge of writing down a set of rules. Could be 3 rules, 4 rules. Could be a moving average crossover with an X bar confirmation, with a bit of price action. A very simple strategy, and follow with some money management. So the risk reward has got to be a minimum of 1-to-1. So it can be anything more than 1-to-1. And do that for 25 times. Okay. And when you see the losing trades, continue going. When you see the winning trades, continue going. And you have to position size, so you're making sure that you're only risking the set percent per trade. Now, do this with a 0.5% or 0.25%. Do that 25 times. I bet you most people are unable to complete 25 trades following a simple set of rules religiously with a tick box saying, yeah, that confirmed, that confirmed, that confirmed, I'm entering my trade. Right. Most people aren't able to follow their own rules, let alone someone else's rules, for 25 trades on the bounce. I can tell you that now. Right. And most people that will lose in Forex are unable to follow discipline and rules. And that challenge, you'll learn a lot from that challenge. First of all, you'll realize at the end of the 25, I mean, ideally you do more, but I think if I asked people to do more, they'd just tell me to jump in a lake. But if you did 25, you'll be amazed at the end of the 25 how you're going to have 3 or 4 or 5 losing trades, possibly, when ordinarily you'd have swapped time frames, you'd have swapped, strategies, you'd have thrown that one out. But then you can have 3 or 4 trades, then you have 2, and it's going to go like that. At the end, I think you'll be quite surprised at the balance of no matter what strategy you pick, as long as remember markets are random. But if you do the same thing time and time again, you'll be surprised at the balance at the end. It's going to be around 50-50 or 40-60, something like that. Chances are you'll break about even. There's possibly a small loss or possibly a small profit because the strategy has not been tested properly. But you'll be amazed at the sequence of where you would normally have thrown a trade out, after 4 or 5 trades. You'll also be amazed at how you're not going to actually blow an account doing that. If you won't blow an account, and if you could do that, you can say, yeah, I can follow a simple set of rules, and I didn't get psychologically involved. I didn't throw it out trades because I'm doing a 25 trade challenge. It's a real good challenge for people that are struggling.
Yeah, and I like that. And you have said it before, and I think it's so big because most people still aren't going to do it. Even though you and I are both sitting here with, you have decades of experience. I got a decade of experience in the market, and I know that. And what you just discussed is really quantifying what I'm trying to explain psychologically, and that is people make the same mistakes over and over. And you can say, do this 25 trade challenge. Someone who's been in the markets for even 6 months or a year or even 5 years, let's say, would say, okay, I already know what that's all about. I've tried that before. I think I've done something like that. And they'll say, whatever. But you're right. You can learn from yourself. And what you could even do is set up a demo account or, a small live account, link it to MyFXBook, and that thing will break down every trade, how long you've held it, which pair you used, all this stuff, and look at it and share it with us if you want to do that, or share it with the group. Let us all give you some feedback. Part of the reason, and this is just a small little part, but part of the reasons why I agreed to come in and do this sort of quote unquote mentorship stuff with the Forex Signals is that I know that when I'm under a spotlight, I follow the rules a lot more than when I'm doing it by myself, right? Because you got to answer to everybody. Everybody. Yes. You could have 10 raving fans, and the one who's not will post a million things about how you're messing up because of this and that, and they don't like your shirt and all this other stuff. So if you really want accountability, you have to get help with that. And if you can't do it on your own, you got to learn from somebody else. So the 25 trade challenge is big because it's so foolishly easy, like you just sort of smiled about. Yeah. But people still don't do it. And if you can't make 25 trades with a simple strategy, you're not going to be able to adjust other things while trying to follow those rules. Yeah.
It's a discipline thing. It's not trying to make money. That's what I'm saying. If you do it over Christmas when everything's quiet, do it on a smaller time frame, do it with a minutest amount of real money. If you do demos, fine. If if you do demo, the chances are you will chuck it out after 3 or 4 because it's not.
Right.
No, but if you're doing it seriously, it's amazing how most people won't. In fact, some chap in the room the other day talking about this, and I told him, about not deviating from the strategy. And actually, with about 4 or 5 trades in, he private messaged me and asked me, should I? It's not working. I think it's going to change timeframes. And this was the exact thing that I was set the challenge for. Don't try and change just because it's not working. Right. The idea is, can you do 25 things on the bounce, even if it's not working?
Right.
Because you can't throw it out after 4, because it's the challenge. If you can, do something repetitively for 25 times. Right.
The results should be the same if it works really well or if it doesn't work really well. The results should be the same. You stick to it. So
the chances are. Sorry.
Are you calling me on Skype, Andrew?
Probably someone was buzzing me. I tried to cancel him.
Oh yeah, my phone lit up and it said Skype call from Andrew Lockwood, missed call. Oh, that's interesting. Funny. But you're exactly right. So you shouldn't change based on what happens. So if you lose your first 10, it should be the same as if you win your first 10. Most people I know, if they win their first 3 or 4, they want to go bigger lot size. Or they want to say, hey, this works on the euro dollar, probably will work on the pound dollar too. And then they do 2 pairs. And if they lose, they want to change everything. So doing 25 in a row, I think, is a really big thing. The more I talk with you about that, the more you bring it up, the more I think it's a great test. It's almost like taking a discipline course in the military or in college, to just show that you can do it.
Yeah, absolutely. Yeah.
I see some stuff in the chat here. I haven't had time to look at it yet. I'm sorry.
Sorry. I'm
Stand up says trading system, strategy.
Okay.
Yeah, I see one here. It says, if you don't do the same thing conditionally, it's impossible to quantify an edge besides money management. It's exactly right. So you have a little indicator or a app or something on yours that applies. You put in the risk and then it puts the stop loss in, or how does yours do it?
It's just basically it's a money management tool. Basically, it works out a percentage of my account on the trade. It works out. It's optionable. I can change it from 1, 2, or 3 different exits. It's based on an ATR. If I want to put it on an ATR, it's based on I can actually move my stops on it as well. But it basically allows me to take all the emotions out of the entry. Everything's predetermined. So it really, it's a bit like it's an EA basically that, but it's something I can manually adjust as I enter a trade.
Right.
It just keeps me out of making too many emotional decisions. It's not, it's not an automatic. Doesn't trade automatically for me, but it means I don't have to work it all out manually. I don't have to work out my percentage lot size on each individual trade because it's done it all for me. But
nice. Is there anything that you want to cover, Andrew, before we go into the weekend about the markets at all? I know we ran a little bit late. We were going to go from 7:45 to 8:45 here, my time anyway, Central Time. And I'm able to go another about 15 minutes or so if you want to before I have to leave. Is there anything you want to cover about the markets or about anything? I mean, the thing that we were talking about yesterday was the pound news and the CAD news. And the pound news came out poorer than expected, and the Canadian news also did, GDP. But I don't really have anything that I'm not in any trades right now, by the way. The Euro Aussie trade, I pulled my stops down just a little bit before bed, and they got hit. But I had the 2 winners and 2 losers, so that's sort of how that played out.
Okay. No, I've got nothing really. I mean, I said in my stream this morning earlier, the markets are really sideways moving at the moment. I'm not in any positions. I have, I said yesterday, I got stopped out at break even yesterday in the dollar yen, and that's me done now for the for Christmas. So I'm not going to be getting involved. Not because there are opportunities there on the shorter time frames, but and people are. I see some people scalping there today that are making some good pips, and that's great. It's not the way I'm doing it today, but there are opportunities. I pulled up the dollar yen. I'm obviously a buyer of dollar yen as a long-term play. If you look at the daily, the weekly, we're clearly in an uptrend. But it was the 4-hour that basically made me talk about it this morning. If you can put up the 4-hour on the dollar yen.
Sure. Let me get rid of all my lines here. Yeah, let's do that. I'll pull it up. Let me move over my OBS here, and we'll pull it up. Properties, and
Sorry to put you on the spot there.
No, you're good. There it is. Okay, so I have it up there now.
Okay, so I was just looking at the dollar yen on the 4 hour now. Obviously, we're clearly in an uptrend, so my bias would be to buy this. But for a counter trend trade, this is why I look at my analysis covering all aspects. We've seen this series of lower highs here as it keeps trying to test that re-high, and it's almost drawn a perfect trend line from the high on the where we're on the high of the high from the 15th of December, and we're making these lower highs. So that just gives me the feeling here that we keep trying to push up to the new highs, but it's failing. So this could be shaping up for me to be a bit of a trend reversal back down to the 116 level. Okay. We're poised around the 117.5 level at the moment. But I'm not trading trend reversal, but if I want to get involved in this, anything below this trend line support here now at 117.30 could possibly see us pull back down another 100 points to the 116 figure. So that's not a trade that I necessarily take myself, but it's certainly something I'm mindful of. You might find initial support coming in before that, but when I see something like that, a heavy upward momentum trend failing on 1, 2, 3, 4, 5 occasions, it makes me think that we could possibly see us roll back over. But of course, we've got such thin volumes in there now. A lot of the liquidity dries up, so sometimes it doesn't take such big moves to have such big volume to have big moves in the market. So I'm off. I've got my foot off the gas in terms of placing trades at the moment, but that's something I'm certainly looking at.
All right. I just turned off my mic for a second. My dogs are barking. I think somebody was at the door. I tried to get my dollar yen to look sort of like yours did on your, because I can see your screen there pretty well, actually.
Okay.
So that's good. I moved my head out of the way. If I move my head down here, then I cover up your beautiful shirt. So I don't want to do that.
All right. Okay.
One of the guys in the room said, I'm going to watch it later. Watch this. Andy's jumper was making me feel ill, splashed over my screen. Is it? That's funny. That's funny. That's good stuff. Let's see.
Snap black on it. Okay. Sorry about that. Is it moving up and down? It's the little eyes that are moving up and down.
Yeah, it's funny. It's funny. I have my charts up here now. I don't really have anything I'm looking at. I mean, the thing for me is, I was trying to play CAD strength because of oil rising, but it really didn't. It's been sort of sitting sideways. Basically, dollar strength is what's going on now. I mean, the Australian dollar is falling, pound dollar is falling, even the euro dollar is starting to roll back here a little bit, and euro strength. I mean, gold and silver pretty much been sitting. I mean, just sort of boring consolidation here, really.
So what we're seeing on my, I use this little strength meter. You might be able to see it. I think some people have seen it before. Mm-hmm. We're seeing over the last couple of hours or so, we're seeing yen strength, and we're seeing basically CAD weakness. So yen is the strongest currency at the moment, and the CAD is the weakest currency. So if I were trading, I'd be looking at the CAD yen, but I'm not getting too involved at the moment.
Yep. And part of that's due to that news. That news is terrible. That news is terrible. GDP -3. I mean, that's the lowest it's been there since July. So, and what's interesting? I have the dollar CAD up right now, and on the 4-hour time frame, I'm going to zoom in just a little bit for you guys here. I'll get rid of these lines here. I had a little wedge. I'll get rid of those. The dollar CAD on the 4-hour time frame is coming up. I drew some bold red lines here. If you look to the left on my screen here, I think I have it up still. Yeah, there we go. You can see the levels of resistance. We made it through the first one. We're coming up on the second one, and the third one is still a little ways away. This first one that we broke through was basically just the resistance on the swing highs around 135.37. The next level is the other swing high at 135.63 or so, and then the top one is 135.88.89. So if we zoom out on the daily, when we look at the dollar CAD on the daily here, I mean, we're really coming up on an important area, aren't we?
Oh, absolutely. Dollar CAD. I mean, I'm looking here at one that, this is going to have some big resistance up here. I think the level you should be looking at, of course, is Still, we've got 135, 135.90, obviously 136 basically to handle. So as we approach now, 50 pips from here to the upside, it's going to find certainly some resistance at the moment. It'll be interesting to see where we go from here.
Yeah.
Again, as a counter trend trader, I think risk reward would be would be in your favour to sell the dollar CAD around this level.
Mm-hmm.
However, for me, getting in front of the US dollar strength at the moment is selling in front of that trade is going to be risky business at the moment.
Yeah. I agree.
You've got to pull back and go on.
No, I was just gonna say something that didn't mean a lot. I was just gonna say it's definitely a key area that we're watching. And I think if you look at the Euro CAD, you look at dollar CAD, you look at crude and dollar index, that's going to be your best way to decide what to do. But you're exactly right. A counter trend trader, someone who's looking to sell at resistance, someone who's looking to sell something that's overextended, not the worst time to be selling dollar CAD, but it's definitely not with the trend, is it?
Yeah, that's right. Yeah. I mean, dollar index. Dollar index it's been in this tramline environment now for a few trading sessions.
Yep.
And the moving average. I always use a 20 moving average to give me an indication of the of trend. 20 is sort of like not too short that it gets ripped around, and not too fast that it gets ripped around, and also not too long that it doesn't react.
Mm-hmm.
So it's good for intraday trading for me, and it's pretty horizontal. So we're looking for direction certainly in the dollar. I think.
I just pulled it up on the 1 hour just like yours there, and I dropped the 20 in, and you can see just like you said here. I haven't had a moving average on the dollar index before here, but it's really flat. I mean, it's
absolutely flat.
Yeah. So, are you done for the year then? Trading? Are you finished?
I'm done. Yeah, I'm done. Not only because sometimes I trade on this time. It's only the fact that I've got quite a lot elsewhere that I've got to do for forex signals as well. So I'm taking my eyes off the charts.
Mm-hmm.
When I'm trading my account, then I like to be a bit more focused than Christmas Eve. So I'm only off for that reason. I'm here. I'm active in the training room, in the chat room. But I've taken off. I've had a good year in terms of P&L over the year. So I'm just going to enjoy the Christmas. I'll certainly be in the chat rooms and chatting away. But I'm done now, and looking forward to setting off in the new year with a new account, fresh beginning.
Mm-hmm.
Not fresh. We always start from the year, and we'll get going again.
Sounds good.
I think that's good.
I have our videos up here now so people can see us as we're getting ready to sign off too. So I like that shirt here. What's the rest of the shirt look like, Andrew? Is there a bottom on that snowman, or how does that look down there?
Let's have a look. I think it's
oh yeah, just that. That's awesome. I like it. That's
a little scarf, a little green scarf.
That's good. I like that. One of the traders last week asked me, was recommending topics for this Friday chat that we do with everybody. And they said they like to learn, and I think this is a really good idea. Maybe we could do it even next week, how to treat trading like a business. Like when do we take withdrawals? How do we work with our taxes? Do we have to track all the money, and how does it work with different brokers and things? I think that's a nice little topic to talk about because not a lot of people talk about that.
You just say a word in there that I want to avoid, but only because I'm not a tax advisor, and I want to keep away from advising people on their tax. Certainly, I think that's a great topic, a very valued topic, and there's quite a few people asking. I think next Friday might be a little bit.
Oh, that's right, because it's the holiday. I'm sorry, I forgot about that. Yeah. Next Friday is the day before New Year's Eve. Yeah. Okay. So maybe
I think it's such an important topic. I think it'd be good to have some exposure and some feedback from the rooms. So we'll leave that for the week after, maybe.
And for those of you who are in the public room now, and I know there's some newer people that are in here that I haven't seen before. Andrew and I do live streams every day in the premium room. Now the next week's gonna be a little odd. I'm still gonna be doing all of mine except for the Monday one on Boxing Day. But what we do is Andrew does this. You do a stream every day, and then you
every day just after the market opens 8:15. 8:15 GMT. Yeah.
Yep. And then you come in ad hoc, and we're in the chat room as well. And then I do my streams every morning, and then I do Tuesday and Thursday Tokyo streams as well. But as you know, if you're in the premium room and you're a premium member, we're around all the time. talking about things and what we can do, and you can Skype us and things too. But the premium room is going to have some great new functionality. I don't want to talk about them now because some of them are, I'm even wondering how in the heck they're going to do this stuff. But there's some cool stuff coming out in the premium room. And I think the guys over at the main office are going to be doing some marketing and bringing more people in. It's going to be a good time. So I just chatted yesterday with two traders for a while. Sort of cool to have that intimate setting in there right now where you really get to know people one-on-one. And obviously we want the room to grow. But I made a joke last night, I think it was, about saying, we're going to remember back in the old days when it was just us 10 or 15 or 20 people, in the room because you get to know everybody. So cool stuff.
Well, I think I've spoken to most of them on a one-to-one, for informal chat. So
yeah,
I know you've spoken to them.
Either you or I have, I think. Yeah.
Well, that's right. People are in there because it's a good community anyway. So that's good. So I'm pretty much done, Jason.
Me too. I think we're good to go.
Okay, guys. Well, I'll take this opportunity to wish you all a very happy and peaceful Christmas with your families. I'll be back on, as we've said, next Wednesday, Thursday, the premium room. I'll be in and out of the chat as well. So until next, almost next year, I suppose. Would you say next year? Next year. Next year, 2000. Next week.
Yeah. But it's pretty. I mean, as far as trading goes, I'm going to be doing some trades next week if I find some. So I'm not quite done yet, but I'll be going a little smaller, not getting too crazy because I've been whipped out in this time of the year before. So but I'll be back on Tuesday morning, and I'll see you guys then. But have a Merry Christmas, Happy Holidays, all that good stuff, and then we'll see you next week before New Year's rolls in, and we'll see how things shake up.
Okay.
All right. Thanks.
Apologize
have a
for
great
abusing
day,
your
great
eyes.
Weekend.
Okay. Cheers now. Bye.